Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have Mehraboon Irani now joining into this conversation. Mehraboon, good afternoon. Now, it's been a challenging month, actually. This has been a slow, painful grind. This is not one of those quick 2 days swift corrections down and then market resumes its rally. I want to take up the point that Prakash just made and get your views on FMCG stocks, consumer FMCG, very richly valued. Are they susceptible to a bigger correction? Do you see some sort of, consumer spending slowdown ahead?
I think, as always, investors, traders, market men in general normally get carried into a cycle in a bull market. So nobody had questioned the valuations maybe 2.5, 3 months ago. People are gung-ho on the story. I still believe the story is very, very positive, very, very good. The valuations and quite a few of them definitely looked expensive. But I would like to add one thing, that some of these valuations have distinctly come down over the last 1 month. Should one shy away from them? I think as stories they remain intact. Also, it gives you a lot of comfort because at least 90% of FMCG companies don't have a problem with their balance sheet. The growth is intact. So I would say that if people are not sold because of valuations being high, I think there is no need to be in a great rush to sell off because, as I mentioned earlier, this is a market in which one is going to see a lot of volatility. I still believe this is a very deep and sharp correction in an otherwise bull market. And when things come down, it's not going to be easy for you to pick the same stock again because your confidence will go down and down with every fall in the market. So I would say when the stories are good, when things have corrected from higher levels, one may not be in a rush to sell into FMCG because I do believe that the earnings will keep on growing. There is a problem of input cost here and there. There are certain companies which are extremely expensive and one can possibly come out of it. But there are certain FMCG stocks which I believe there is value which has come into them because of the recent correction which we have seen in quite a few of them. Like Glaxo Consumer, I'm very, very bullish on this particular company. There is another company which I think the non-core assets, according to me, as and when some restructuring may happen, there could be a lot of value unlocking happening, and that is a company called Coffee Day Enterprises. So there are stories here and there. I think copra prices are on the decline. So a company like Marico should do well. If the stock has corrected by 5, 10, 15, 20% over the last 1.5 months, and quite a few of the frontline FMCG stocks, including a stock like Lever, has corrected, I think it would be a little bit too late to sell into them. This is not to state that they cannot come down by 4 to 5 to 6% more from here, because if the market comes down, the stocks will come down. But I don't think you're going to get a disturbed sleep if you're holding on to something like a Marico or something like a Godrej Consumer or something like a Coffee Day or a Glaxo Consumer, and they correct by 5, 6%, you're not going to lose your sleep because you will take comfort in the fact that the overall market has come down. My portfolio value has come down because of the stocks, but at the end of it all, I know the stocks will trend higher because the consumption story otherwise is very much intact.
Mehraboon, just sort of your thoughts on, apart from the consumer names that you've already mentioned, would you prefer to just be in cash for the moment? Or do you see some clear bargains in this market?
I think this is what I've been advising my investors, that about 10 to 15% of cash would be ideal because the problems have started. I think quite a few factors have virtually spooked investors, spooked market sentiment. It started with oil, rupee depreciating, trade deficit, Iran sanctions, US-China imbroglio which is going on, continuing, and one really doesn't know as to what ultimately will happen on that particular front. And then recently we had a possible debt default of an institution, which I believe ultimately will play itself out over the next few days, and hopefully should become a part of history because it's not a problem of solvency, it's a problem of liquidity. But either which way, it has spooked investors a lot. And like what Anuj was saying, I appreciate that fact that NBFCs is a space where people have made a lot of money. And when you have most NBFCs losing 20, 30, 40% of their market cap in the last 8, 10 days, it does hurt market sentiment a lot. I personally feel that if you keep a cash of more than 10 to 15% in a market, which I again reiterate as a bull market, and we are seeing a very sharp fall in a bull market, you will not be able to catch the bottom, and you will ultimately, for all you know, end up buying the stocks at much higher levels. So if you are comfortable with your portfolio, stay put, wait for sharp declines in stocks which you like, and go and buy into them. That is one option. Second option is, if you are feeling uneasy, it is the time possibly to come out of the market and use sharp dips to buy again into the market. if you feel you are capable of doing that, which in my experience over the last 25 years, I don't see a lot of people doing that. You end up selling, you would never buy at a lower level. You end up buying at a higher level when everybody starts speaking positive about the market. So I feel anything more than 10 to 15%, I think would be a luxury according to me, and deploying it in a market which is falling and whenever it bounces sharply, I think would not be very practical or would not be very easy.